Hi friends, sometimes many of my friends ask the same question that sir, we are from non-finance background. Is there a simple way by which we can understand which stock is going to become a multi-bagger? Is there an easy way for us because we do not understand the financial jargons? The answer is yes, my friends. The simplest and the most powerful way is to look at the FIIs trend and as well as the DIIs trend. But FIIs makes more sense because they have more muscle power. So if FIIs are continuously accumulating a stock, that simply means that the business model of that company has something very specific which those people have understood and started accumulating. So in this video, we will be talking about two stocks which FIIs, foreign investors, are accumulating, and let's look at that and ride on their research wave. So let's begin today's Sagarnomics, which is very important, very useful, and as always, if you are a serious investor, watch till end. If you are a real and entertainment seeker, other channels are good for you. So based on that, let's continue and start today's analysis. Let's begin Sagarnomics. So before we proceed and start analysis, there are a couple of few things I just want to tell you is that first of all, I started creating Hindi and English content and I kept the separate playlist for those to cater to the needs of all the friends on this channel. Don't get confused, you will find the thumbnail with Hindi and English. You can choose your own language accordingly. Second thing is that I keep on posting my analysis, my insights on my YouTube member community forum. So if you want that, then please consider joining my community. The feedback of the people is really great. Now the third thing is that if you systematically want to understand how the stock selection work, and do you want a without theory, a practical step-by-step framework by which you can create a very powerful stock portfolio for the long term, you must consider joining our stock selection masterclass. The link to both these things are given in the comment box as well as in pinned comment. With that, let's begin with the analysis of the first stock of today's analysis. So over here you see the first stock is Jupiter Wagons. Now what does this company do? This company basically, first of all, let's understand the business model. This company is related to the railway stocks, okay, Indian Railway. Now what does this company do? As the name suggests, this company makes wagons, bogies and train related hardware, all those things which are required. So I'll just give you a little understanding about that. So this company makes all kind of wagons. So there are covered wagons, open wagons, then there is a flat wagons, defense wagons, container carrier wagons, wagon accessories, passenger coach accessories, wheel set and track solution, and so on and so on and so forth. Right. With that, I just want to tell you that this company is trading at 522 rupees, approximately 22,000 crore rupees is the size. So it's a large cap company, no problem. Return on equity is 27%. But you would be asking, sir, these are the simple numbers. Everybody talks about that. What is so special about this video? The answer is, let's go down and find out the secret over here. What is the secret? Look at that. The shareholding pattern, and you'll find that the promoters are holding around 70%, 68%. So they are in good control of the business. Look at the FIIs. FIIs in the beginning, they have had almost negligible shareholding in this company. That means 0% or so. But consistently, they have started building their position. And now they have 5.34% of their of shareholding of this company. Not only that, look at the DIIs. The domestic investors, they also have started increasing their accumulation in this stock, their shareholding. Now you would be asking, sir, the numbers of the DIIs is fluctuating. So again, we are talking about FIIs, not just DIIs. Second thing, even if you want to look at that, I just give you a very, very powerful hint and a powerful trick for this kind of confusion. Never ever look at the daily or the monthly trend of FIIs. There, if you do that, you will get deceived by their speculative bets. What you need to do, and try to understand this very carefully, look at the long-term trend of the FIIs or the DIIs in one particular stock which you are considering. So if you find that FIIs are accumulating a stock for say 2 years, 3 years or more, that means that the stock has something very special that those people have researched and found. So if we look at Jupiter Wagons, you will find that from 2021, 3 years, these people, FIIs, have started accumulating this stock, and now they have reached up to 5.34%. That means they are testing this stock for last 3 years. That makes their accumulation very strong. Looking at this, the company's management recently have said that they are making large number of wagons, those containers, but again they are asking that they are saying that there is a strong wagon demand. The expectation is between 30,000 wagons. This is what management is saying, that they have a business ready in the market, but they have to cater to that by manufacturing that. Now look, they have strategic partnership with all the big names like LAF, CAF, Covis and others. Now look at the numbers over here. They have 40 years of experience, 20 plus sectors they are catering to, not one or two. 9 strategic collaborations, as I explained to you earlier also. 12 plus world-class manufacturing facilities and 3,000 workforce on 60 plus clients. Now who are the clients? Let's look at them. Now these are the clients that any company can be proud of. So you see, from railways, they have Railway Ministry as their client. They have Ministry of Defense as their client. Not only that, from private sector, they have Tata Steel, Jindal Steel, JSW Steel, Ultratech Cement, ACC and Ambuja Cement, plus all those Adanis, and you can say so on and so forth. So they have all the big names in the industry as their clients. And you can simply see that as a result of FIIs buying plus a strong business model, the company's stock price has risen from say 350 rupees approximately to around 740 rupees in the period of around some 2 months and so, right? But from there it has started collapsing, and now you simply see that it's a short-term phenomena. If we go to the monthly chart, you will find a better picture, and you see monthly chart is showing these green candles and then there is a downfall. That simply means that the market is not rewarding this company as it should be getting rewarded, right? So if you look at this chart, you will get to know that in the short term, considering the company's business model as well as the future outlook by the management guidance, you simply can expect around 50% upside in this stock, and it should be touching anywhere between 740 to 750 in the next 3 to 4 months. However, I should say that this is not a stock recommendation and no prediction can be made in the stock market with complete accuracy. If anybody claims that, then that is absolutely a false commitment. Just try to understand, it's just a projection that we do after a lot of calculation. Now coming back to the second stock on our radar. So before we move to the second stock, I'll just want to tell you once again that if you find my analysis even a 1% helpful, then please make sure that you like the video and subscribe to this channel, hit the bell icon, and also share it with maximum people. It will help me, it will motivate me to do much better analysis and hard work for you in coming days. Now moving to the second stock, that is the stock, very powerful stock, that is Lloyd Metals and Energy Limited. Now this company is here for quite a long time. It is 52,000 crore rupees market cap, absolutely long. I mean, it's a large cap company. What does the company do? It is into the metals and energy, as the name suggests. Sponge iron, iron ore and power. These are the three things this company is doing. Now you will simply see that as compared to this company, there are other companies also doing these kind of things over here. But the point is, just like Vedanta is also doing mining and all the metal related businesses, problem is that Vedanta's management is absolutely pathetic. I should say a wonderful company, first class company run by third class management who is misguiding the investors, shareholders by taking loans and distributing it as dividends. So compared to that, this company is doing much better because the management is low profile but consistently focused on the business growth. So look at here and you'll get to know what I'm trying to explain. So you simply see the company's growth, ROC is 78%. Tell me how many companies deliver that great a number for investors, plus the ROE of 56%, again very phenomenal, no doubt about that. Industries PE is 22, the company's PE is 37, a little expensive, but if you look at the PEG ratio, picture completely changes. It becomes undervalued stock. And always remember, PEG ratio considers the EPS growth, and that gives you a better picture for undervalued or overvalued situation. So this company is clearly undervalued company at present. Looking at the foreign investors FIIs accumulation, so simply look at here. Owners are having around 63%, so that's okay. FIIs, they have not invested in this company till 2022. After that, they have started getting interest in it. It was, I think, it was differently named at that time. But 2022, they took a small portion of this company, and then they have grown up to 1.84% within these last 2 years. And that's a good hint for investors like you, me, and everybody, that never ever involve your park most of your money all of a sudden in a stock, but rather start small, analyze, keep monitoring, and then make your allocation bigger in a particular company, right? So now FIIs and DIIs also till 23 they did not consider this company, and then they have started building up. After 23 they have reached from 0 to 1.25%. Again, DIIs, FIIs are speaking the same language, both are accumulating the stock. There must be something special about the company. So with that, let's talk about its stock chart pattern. So I don't know how many of you actually look at the stock charts and open daily charts. I think most of the people first of all open the daily chart, then they go to the weekly chart or maybe 5-minute candle chart or something like that. But what I suggest and believe is, first I look at the monthly chart, then I go to the weekly or the daily chart. Before that I don't go, because I am a long-term investment researcher, and that's what defines and suits me. So looking at the monthly chart, you will simply see that the stock's 3 green candles and this bigger green candle in August, September clearly shows that the company is in a growth path and it is consistently growing, right? Now what is the overall return it has given in this particular 1st December 23? That means approximately this year you will find that it has given 100% return in this particular year only. Looking at the daily or weekly chart, you will see weekly chart almost giving you the same kind of situation. It is making high highs and high lows. That means it's in a bullish trend. Looking at the daily chart now, and you will find that the company is doing pretty well in this segment also. Recent run up after 15th of September, it has given a breakout, and now it is going ahead and made a flag pattern, and I just consider that with that, based on the coming results, it should continue to go on the bullish pattern. I mean, it should the price should keep on rising, but again it will depend on the business performance of the company. So these are basically the important points of this analysis. I don't want to drag this video a little longer because people get impatient, but the only point is, always look at this way. The company, any business can be defined into 2 ways. One is qualitative analysis, second is called quantitative analysis. Both are required for an analyst to consider, because if you look only at the qualitative, then the business performance in the numbers is ignored, and the vice versa. So always 50-50 allocation should be there. In my videos I try to do that. So if you want such type of the analysis plus regular insights, then just do consider joining my membership, where I'll be sharing my insights with you. Secondly, if you want a systematic understanding of how to find the great stocks in minutes, not in hours, in just minutes, with a strong framework, step by step, easy, no theory, then please join my stock selection masterclass. The link is given in the description as well as in the pinned comment. So with this video, I just want to take permission from you. I'll be meeting you in the next video very soon. Till then, be happy and Jai Hind.